Hello, with me today I have Carlos Hardenberg, co-founder of Mobius Capital Partners and portfolio manager of the Mobius Investment Trust. Now, Carlos, the trust has been a standout performer over the past year or more. Could you explain why? What have been the big drivers in terms of stocks and countries?
Yes, you're right. We are now very happy about reaching our third year anniversary and also delivering a very robust and strong performance over those 3 years. We've got a very strong team helping us to execute the strategy, and it's really, as I said, all about finding those quality names in a pretty under-researched and to some degree disregarded segment of the market. So that in itself is something that Mark and I always had a huge passion for, is to search in those segments where you don't see lots of foreign investors competing. The other good news was that the majority of our competitors, for some mysterious reasons, all do the same. They're holding lots of index companies in their portfolios. And we have an active share of over 98%, which means there's hardly any overlap between the portfolio or the strategy and the index, whether it's MSCI EM or MSCI Midcap. Number two, a recipe of success was to concentrate, no alibi holdings, but just a high conviction portfolio of the best ideas that we could identify in emerging markets. Number three, you mentioned it yourself, skin in the game helps, and focus on a single strategy. We don't have anything else. We just focus on this one strategy. So we are highly incentivized to make this work. And last but not least, pairing stock selection with engagement has allowed us to really execute this with the right also focus on risks. So engaging with companies, getting close to companies, really understanding them well, not just reading yet another broker report, but doing this really work ourselves, has allowed us to manage this in a good way. Over the past 3 years, over 85% of the outperformance came from stock selection. We very successfully built exposure to India, which has been one of the strong drivers and is the single largest geography for us today. It's a mix of IT, consulting, infrastructure, domestic consumption and export, and healthcare, which is another theme in India. This is followed by Taiwan, which is really an exposure to the whole world, but the most sophisticated, innovative and vibrant businesses we can find in the tech space without touching TSMC or any of the giants. We're really looking at the small innovative businesses. We are in sensor technology, we are in IC design, we are in encryption technology, and for example, also alternative energy technology, which we've invested in Taiwan. So that also worked well. And eMemory, our largest holding, has had a very positive contribution to returns. But even in some of the more complicated markets where you have macro challenges like Turkey, we have 2 investments in Turkey. We typically try to invest mainly in countries where we see a positive general macro environment. We're trying to stay away from those countries where we just see, endless depreciation of the currency, political instability. But Turkey is an example where we just found such compelling businesses, and we felt that they will do well even in a difficult macro environment. And we invested in a software IT firm and a premium fashion business, and both of them have actually done really well. So most of the focus is on Asia. I would say 80% of our time we spend on Asia. Our network, the strongest network we have, is in Asia. Most of our relationships are in Asia. We lived the longest part of our lives there. But also in places like Africa and Kenya, we found a very interesting technology business which has done well and had a positive contribution to performance.
So Carlos, you've talked about some of the best opportunities, but what stocks and sectors have you been buying most recently?
Yes, so we are currently quite deep into various research projects, as we call them. And as I said, technology is still an area which is never standing still, where we see a lot of new opportunities coming up quite regularly. And within that, of course, we're looking at businesses that have a very strong competitive advantage, that are structurally growing, that have low leverage, which have a healthy balance sheet, which have a strong positive cash generation at reasonable valuations, and all of this kind of in a sustainable way. So we've recently added a business which is a global leader in mini microphones. These microphones are embedded in every conceivable electronic product, from automobiles to robots to laptops, headphones, airplanes. And these microphones play an increasing role as we, as kind of human beings, speak more and more with our with these devices, all the way to fridges. The microphones obviously have to be of high quality. There's no room for error. And again, we found a business in Taiwan which is competing globally. There are quite a number of businesses in that segment, but they are, in terms of quality, in terms of reliability, in terms of also the ability to produce at a mass scale with the appropriate quality and price. They stand out uniquely. Recently won, for example, a big allocation by Tesla and other automobile companies. And we really like the business. And we think that with the introduction of Internet of Things and increasing autonomous and semi-autonomous driving, factory automation, they will actually continue to be successfully operate their business. So that's a recent addition. But we are also looking at another opportunity in Africa right now. We're looking at one other opportunity in Korea. So there's always quite intense research going on. We have another one in Hong Kong, and the focus is on healthcare, technology, and innovative local consumer businesses.
Now, investors will likely not have heard of many, if any, of the companies, certainly in the top 10 in your portfolio. Now, again, you touched on this briefly in the last question, but how do you go about identifying suitable candidates and gauging their potential for generating big profits for Mobius?
Yeah, so we've got a very rigorous investment process in place that we follow, and we narrow the universe while we really try to work in a unconstrained fashion. So we try to keep a very open mind about where and what and why. We still have a very clear pathway that we try to follow. And currently we are convinced that the biggest opportunity in emerging markets, because of the fact that it's under-researched, under-owned, neglected, yet highly innovative, is in this space between 2 and let's say 4.5 to 5 billion in market cap. So we narrow the universe in the respective countries. We allocate responsibilities to team members. We have mainly a sector focus, but also some geographical responsibilities. And within the sector, especially healthcare, tech, and consumer, we are then narrowing down on those businesses which meet our criteria. As I mentioned, we're looking for competitive advantage. We're looking for structurally growing businesses. We're looking for companies that have developed a strong brand name, that have a very healthy balance sheet, generate positive cash flows, and where we simply understand and get excited about the product or service. So we, as consumers ourselves, as human beings, we prefer to invest in businesses where we catch this excitement as we do research and get to know the business. And then what really plays a huge role is we always try to understand the strengths and weaknesses of the culture of each business. And again, we prefer businesses which have this strong culture where there is a good balance between the genders, where there is generally there's an awareness of how to build and maintain a strong corporate culture. And of course, we can't do all of this just with our internal resources. We have a number of experts that we work with in Asia in the healthcare segment. These can be doctors, these can be individuals that have spent their lifetime in the healthcare industry in the various countries. We also work with academia, for example. We've worked with a number of PhD students in Cambridge University and other universities around the world. We work with a think tank in Silicon Valley, where we did a lot of research on a special hardware technology. So we try to always think outside of the box and try to establish or find out who are the smartest people in this space, who can we work with in order to move up the learning curve quickly, and then invest. And that's why we can build this conviction in companies which are actually under normal circumstances quite hard to come by and to identify.
At the end of July, the trust had just over 7% in cash. Now, is that a normal figure for Mobius, or is it a sign that you're waiting for a market pullback before putting that cash to work?
We try again not to think too dogmatically about this. If we have to sell, if we want to sell a position for whatever reason, the reason is very clearly defined. If it reaches our targets, if there is a change to the business model, if we find a significantly more attractive idea out there, then we sell the position. And it may be that at that very moment in time, we don't have immediately another idea ready. It may or may not. So therefore, cash can vary depending on the time. Of course, in general, right now we are extremely optimistic and positive and bullish about the situation in emerging markets as we are moving out of COVID, hopefully completely eventually. And as trade normalizes, as we are seeing that industrial production is picking up, as we are seeing that the consumers are, the consumption activity is normalizing. And so we're very positive, and we think that at the moment, in January, we should be fully invested. We are at the moment almost fully invested. We issued some shares, so we actually got a little bit of fresh money into the trust. We intend to issue more shares going forward. And just the last 4 weeks alone, we've added another. It's not disclosed yet in detail, but we had a very good last month as well. So the relative outperformance looks very promising.
Okay, now the trust has had a great few years as we've discussed. I mean, how optimistic do you feel about prospects for the fund compared to previous years?
Well, the pipeline of interesting ideas is quite long right now. We've got a couple of interesting businesses where we are closing the research projects. We're about to finish the work, and then we gradually will invest. I think overall the opportunity in this segment remains highly attractive. If you bring the right patients, if you really have a 5, 7, 10-year investment horizon, as we can see, emerging markets have never before registered more ideas and patents. They've never before were better prepared to compete globally in some of the most difficult industries around the world. They have invested in infrastructure. They've invested in both infrastructure that's geared to domestic consumption and exports. We are seeing that the macroeconomic framework overall is much more stable than it used to be in the past. And this paired with a lot of private sector reform. Even the Chinese, while there's so much criticism right now, they've got a very, very sturdy and solid 5-year plan. They want to increase domestic consumption. They have a very clear plan how to deal with some of those loss-making industries and with the inefficiencies that they have in the market. So overall, we think that emerging markets are in a very good position. And we think that especially in the service sectors, as I said, in healthcare, there's going to be a decade of very, very strong healthcare investments in emerging markets. And a decade, if not more, of tech investments, which we will witness. So it is a unique time for us to participate in these opportunities while they are still pretty uncovered.
Fantastic. Carlos Hardenberg at Mobius Investment Trust, thank you for joining me today.
Thank you for your questions and thank you for speaking to me today. Much appreciated.